Okay, it is 12 o'clock. I see we have a bunch of folks here, so why don't we get started? Uh, Welcome to Starting Your Own Business. This workshop is presented by SCORE Maine and is made possible by the TD Charitable Foundation, who sponsors all of these Starting Your Own Business workshops. So we very much appreciate their support in offering some of our educational offerings to the folks here in Maine and beyond. SCORE is also underwritten in part by the Small Business Administration. So the SBA is one of the organizations that we partner with, and we appreciate their assistance not only for businesses throughout the country, but particularly here in our state of Maine. My name is Whit Ford. I'm a mentor with SCORE here in Maine. I've been with SCORE, I think, about 9 years now, and uh, I've led many other lives, but I've worked with a whole mess of clients, probably about 90 or so clients every year that I work with. So uh, what I have to say today is informed by my experience with those clients I've had at SCORE, in addition to my own experience working for other companies and running my own company. Our goals for today are more conceptual than detailed. So I'm not going to try to tell you step by step how to do things because we're going to cover too much in order to go through that kind of detail for all of that. So instead, my goal is to make you aware of key topics that you should be thinking about before starting a business or as you start a business. I would like to provide you with some additional sources of information for some of those topics because everybody benefits from knowing a little bit more as opposed to a little bit less. And I also would like to encourage you to do research early. Don't assume that you'll have time to do research later because once you start your business, you tend to have no time. So the time to do research is before you start the business while you still have time. And also, I'd like to encourage you to build your team. And by team, I do not mean employees. I mean all the people that you might turn to for advice or encouragement or financing or assistance or any of those things. They can be people who volunteer, they can be people who you pay. They're all part of your team. And so do use an expansive concept of who you consider to be part of your team because it's immensely helpful to everybody in small business to have a variety of resources that they can lean upon for feedback, for assistance, or for advice from somebody who might have been there before you. All of those are important. So, as you dive in to thinking about your business, I encourage you to think about the why you want to start your business first. This is often what is going to sustain you when times are busy or tough. And if the why is something that gets you excited every day, then your business is going to be a lot more fun for you than if the why is boring to you. The what and the how are often much easier to describe, but they should be driven by your why. And if how you do things and the specifics of what you're doing conflict with why you want to do them, then you're potentially setting yourself up for trouble down the road. A business has typically only a few whats, namely your product or the service that you're producing, and many hows, your processes, your policies, the equipment you need, the capital you need to run your business, the employees you may or may not have, your supply chain, your list of vendors that you do business with, the software that your business depends on. All of those things are critical to the success of your business, and will no doubt require a lot of research early on. For every one of these, it's often important to have plan B in mind. So if you have a key vendor, it's always good to have a backup for that key vendor in case they run into problems with supply themselves or they raise their prices and others don't, and so on. So for every vendor you use, for every piece of software you use, for every source of equipment you have, uh, it's often wise to have a backup plan if your current source turns out to no longer be able to deliver what you hope for. In a similar way, for your employees, um, there's a frequently used line, what if I'm hit by a bus tomorrow? If you or any one of your employees is hit by a bus, how will your company manage to keep operating? So ideally, as you start to take on employees, you will cross-train them so that they can back one another up if one's out sick that day, or heaven forbid, something more serious happens to them. By the same token, you as the owner, ideally, will have some backup yourself. Who can fill in for you if you have to be out for a week or longer? How will your business survive your absence? That is an important thing to think about and can be quite challenging for very small companies with no employees. Anyhow, these are mostly the how you conduct business. The what you're doing is the product or service you offer. And notice nowhere on the slide does the why appear. The why can be something like, because I like helping people, or because I see an unmet need in the market and it is desperately needed. And so you get back, well, I'm helping people, I'm helping companies. Um, maybe you're doing it because it's a skill you have and you just enjoy using that skill. Maybe you're doing it because you're working with a group of people that you enjoy working with and it's what they wanted to do. Uh, it can be complicated, but do spend some time trying to identify why you want to engage in this business. And then you can get on to the how you're going to do it and the specifics of exactly what you're going to do. As you operate your business, your job as the owner is to do all of these things. It's on you to develop the plan for your business. How quickly are you going to grow? How are you going to grow? What markets are you going to focus on? Is that focus going to evolve over time or stay the same? Are you going to hire other employees? And if so, at what point? To do what tasks? What systems are you going to use? For each system you use, is it going to be the one? Or as you get bigger, are you going to need to find a successor for it? That's all part of your plan. And as part of your plan, you're probably going to have a financial projection that says, this is about how much money I expect my business to be using or generating every month going forward. And that will let you figure out how much funding you are going to need to get your company to the point where it starts to generate cash on its own. That's called break even. If it takes you 18 months to get to break even, your company is likely to need considerably more cash to get there than you might have initially expected. Most people think of, oh, I need to buy this, that, and the other thing in order to open. But you may not have enough business in the first months that you're open to be generating cash as a business. And so the funds you raise initially need to be sufficient to get you through that period where the business is losing money, but continuing to grow. As the owner, you are going to be the primary salesperson for your business. It's up to you to sell your product or service to your customers. I've talked with many business owners who have very little sales experience in their background. That's okay. You don't have to have prior sales experience. You'll get a ton as you start your business and you'll learn on the job. Uh, and that's something that we can all help with, but be aware that for a small business, any one of your customers is likely to look to you as the ultimate person with whom they want to sign the contract. Do they want to do business with you? Is this really the best price that they can get? And so on. So be prepared, particularly for large or important contracts, to step in the final moments of the sales process, if you're not selling it yourself, to help close a deal. As the owner of the business, it's up to you to build your team. As I said earlier, it may be employees, but it may be a bunch of other people as well. It's up to you to reach out and say, hey, can I buy you a coffee? Do you have some time to chat? I'd like your advice, or I'd like your help. It's up to you to think about what processes your business is going to need to ensure that you can deliver the product or service consistently with the quality that you expect in a way that keeps your customers happy and coming back for more, ideally. And it's also up to you as the business owner to monitor your financial statements. Even though you may not be a financial person, so to speak, you can figure out how to interpret your basic financial statements. You may not be your bookkeeper, you may not be your accountant, but you need to be responsible for looking over your books, ideally at least once a month, to make sure that things are on track and that problems are not starting to develop. You can detect a lot of things first in your financials that only crop up elsewhere later. So you don't have to become a financial guru, but you do have to learn how to read your business's financials and use them to help manage your business. So that's a lot to have on your plate as a business owner. That's why everybody who starts a business feels as though they're going down this massive learning curve, particularly in the first year that they're in business, because they're developing all these new skills, which is part of what makes it fun to start a business, because you're developing all these new skills. But if you just expect that to be part of the process, then hopefully it'll be fun and not something that gets you down. I should say, if you have questions, you're free to unmute yourself or put them in the chat. I'm happy to answer questions as they arise. So as we proceed to get into more detail on these things, don't hesitate to jump in, ask questions, or post in the chat, and I will endeavor to address them as soon as I can. Thank you. So you want to start a business. What do you need? Well, you'll need a bunch of resources, such as if you have some personal experience that's useful to the business you want to start, that's great. That gives you a leg up already. But that's not a requirement. Many people have no personal experience for that business. They just perceive a need and they want to solve it, and they'll learn as they go. That's okay. But if you have relevant experience, that will be useful. Secondly, starting a business is always going to be risky. You're risking perhaps wasting your time if it doesn't work out, or throwing away money if you have put too much money into something that doesn't generate a sufficient return. So one of the things I tell most of my SCORE clients is my goal is to make sure that you are aware of the potential risks that you are taking on and willing to take them on before you start spending money or spending your time. Obviously, you have to start spending some time to do all the planning, but talking about what sorts of risks might appear and how you could address them and perhaps minimize them is a good thing to do starting early on. Any talents you have, no doubt, will be useful. If you're a great graphic designer, you'll probably make use of that in your business. If you're a great people person, you'll probably make use of that in your business. If you have a talent for numbers, you'll definitely make use of that in your business. So there are many, many, many talents that people might have. Some may be more relevant than others for the particular business you're thinking of. It's certainly convenient if some of your talents, at least, are useful in the business. And you might be surprised how many talents do become useful in any given business. It helps to have a passion for what you're doing. Because, as I said earlier, uh, starting a business is going to be pretty all-consuming at various points. And if you have a good why you want to do this, then hopefully your passion for what you're about to start is already there. But if you haven't figured out something that you're passionate about that relates to your business, it's worth a think. It doesn't mean everybody's passionate about their business. Some people are just doing it because it generates money, and that's fine. But if there's some element of your business that you are passionate about, identify that for yourself and be aware that maybe that'll take too much of your attention at times because that's what interests you the most when other parts of your business need some attention. But that passion is also a good thing because it's what keeps you motivated to work on stuff that needs work within your business. And because of all the time that your business will take and probably money, and it can be emotionally draining at times, it is really important to have the support of your family in starting the business. There are going to be times where you have to put business first, and that can be tough on family, depending on the business, depending on your family. So do involve your family in your decisions to start your business and do seek their support, particularly when you see that some particularly busy times are going to be coming up in the near future. If you can turn to your family and say, hey, the next 2 weeks, I'm going to be flat out on this company. So please forgive me if I'm not around as often. Asking for that support in advance is often a wise idea. And then lastly, in case you hadn't realized it from everything I've said so far, having a desire and willingness to learn new things is often critical in a business because I can guarantee there are going to be a whole bunch of new things that you're going to learn in the course of starting a business. You're also going to need money and time, a lot of it, probably more than you expect, probably more money than you expect too. You're going to need energy and health because without those, where do you find the time? You're going to need not only your existing skills, but also probably some new skills. Some of those you may hire vendors for, but others you may say to yourself, well, I'll just learn how to do it myself. Okay. And don't forget what I started with, that why you want to do this. Ideally, your why engages you and keeps up your energy level and your interest in pursuing the business, even when things get really busy. So as you think about your business, it's good to analyze as much as you can in advance. The two top reasons that startups fail is either because they ran out of cash, they did not anticipate the total amount of money they would need to get to break even and beyond, or they started a company without really understanding the market they're going to serve well enough. In other words, there was no need in the market for the product or service that they were providing. And this happens surprisingly frequently. Somebody says, oh, I'm going to do this because I love doing it. And it turns out that there are already a lot of competitors doing it. And so you can't get enough business to make a living from it. Or maybe it turns out it's a neat idea, but nobody really wants to buy it or buy it for what it costs. So one of the reasons for doing your research up front before you invest too much time and money in the business is to verify that there really is a market need for what you intend to provide and to develop your cash flow projections so that you have a really good idea of exactly how much cash you are going to need to get to break even for your company. So what is it you're going to do? And then how is it you're going to accomplish that? So what it is you're going to do leads you to define who you want to sell to. Who are your target markets? And it's always worth researching your target markets. Even if you have prior experience in the industry you're selling to, you may be thinking of a slightly different segment of that industry than your experience happened to be in. So go talk to people that you think are likely to become your customers once you're in business, and verify that you understand what it is they need and want and value. So if I'm offering you this service, what is it you expect of it? And what is it that you value about that service if I were offering it? Ask open-ended questions that way, not questions that people can answer with a yes or no. And do enough market research to get to the point where you've heard it all before. You've talked to enough people that all the answers you're getting now are ones you've gotten before. And you have a pretty good sense of, oh, that's 10% of my market, that's 30% of my market, that's 60% of my market. And when you've talked to enough people to have a good sense of that, then you've probably done enough market research. But it takes a while to get there. That will be critical to your sales process and to your marketing messages. But it will also be critical to your deciding where you need to spend money in an effort to reach those markets. And it will have a huge impact on exactly how you define the product or service that you're offering. So this is all good to do very early before you've put the finishing touches on your product or service. And then secondly, do develop a cash flow projection. I usually recommend you try to project your cash flow month by month, going out for a total of about 2 to ideally 3 years. Now, I realize that for a business that hasn't yet started operating, projecting where things are going to be in 3 years' time is, well, it's insane. I mean, how are you going to project where things are going to be in 3 years' time? It's all a guess. I know that, but it's a good exercise. And we'll come back to this later, but having a cash flow projection is absolutely critical to justifying how much cash you need upfront, not only to launch your business, but also to sustain the business until it starts generating cash on its own. For some businesses, that'll be your first month. For others, it could be a year or two before you start generating cash. So coming back to your target market, identify who your likely customers are going to be. What attributes do they tend to have in common? Things like their age range or their gender or their income range, or what geographic area do they live or work in? What stage of life are they in? Do they have specific occupations, interests, or hobbies in general? Do they lean left or they lean right, or are they centrists? Do they support certain causes? Are they pursuing certain goals in life? All of these kinds of things get wrapped into what's called your customer persona. It is a brief description of the key attributes of the kind of customer that is most likely to buy from you. That doesn't mean it describes all of your customers. It's just a majority of your customers. Now, you might need more than one persona, and it's fine to have more than one. If you find that, oh yeah, there are 4 different kinds of fundamental people that buy from me, then fine, you'll have 4 customer personas. When we send you the slide deck, which will happen a few days after this workshop, you'll get an email with the slide deck in it and a link to the recording. When you get the slide deck, you can click on these links down here to an article on defining customer personas and a video that takes you through the process of how to do a decent job of it. This is a really important thing to think about because you need to have an image in your mind of who it is that you're selling to as you write your marketing material, as you prepare to go out and meet with a customer or potential customer, I should say. Who is it that you expect to meet, even though you haven't met them yet? All of that can help. Once you've identified who your typical customers are likely to be, then you want to seek input from people who fit that persona often and figure out from their mouths and using their words, what's the problem you're solving for them? So to do that, you might ask them questions like, what challenges have you faced in this business? That may be too broad. You might, if say you're doing a cleaning service business, you might say, what challenges have you experienced with past cleaning companies you've hired? But don't ask them questions that can be answered with a yes or no. Ask them open-ended questions that get them talking for a couple of sentences or a paragraph about all the things that they're looking for in what you're offering. And then dive down a little bit. If they say, gee, I've had a problem with reliability, you can follow up by saying, can you tell me more? What do you mean about that when you say reliability? So try to learn as much as you can about how and why the problems they've just described are problems for them. And then by asking clever questions, you should be able to figure out whether what you're proposing to offer them will solve it. So you could then ask some questions that tend to be more yes or no questions, such as, if I were to do this, would that solve your problem? Presumably they'll say yes or no. And then you could say, well, what about your problem does that solve? Are there any elements of your challenges that you feel that this would leave unsolved? So keep probing and try to get as complete a sense of what they're looking for as you can. And this is all before you've fully thought through your product or your service. You're just trying to understand the customer's challenge and what they want, ideally, in the best of all possible worlds. And while you're at it, figure out why they would buy from you instead of a competitor. Are you offering something that's unique that no competitor offers? Or are they going to buy from you because you do one or two things better than a competitor? If you do them only a little better than a competitor, could the competitor catch up to what you're doing easily and all of a sudden be perceived as being equal to you instead of not as good as you? So look very carefully at who your competition is likely to be and think about what will make you unique, meaning there's nobody else like you, or what will let you defend your business against the competitors, because whatever they do to try to catch up with you, you're managing to stay ahead of them. So after all of these conversations, you have a pretty good idea of what the customer wants. And this is a really good time for you to step back and look in the mirror and ask yourself, is this what I want to provide? And if the answer is, not really, it wasn't what I thought it was going to be, that's a really valuable insight to have now before you've launched the business than 6 months after you've launched the business and spent all that money and time. So all this is in the nature of doing your research to make sure that you are minimizing the number of unknowns for yourself as you proceed with launching your business. The next step, once you have a good handle on what the customers seem to want, is to develop your value proposition. A value proposition is a fairly concise statement that describes what you offer, who you offer it to, what problems it solves, and why they should buy from you instead of a competitor. Essentially, this becomes the core of your elevator pitch, meaning if you bump into somebody in an elevator and they ask you, what do? You would say, and you launch into 2 sentences, which answers all these bullets. And that's difficult to do. Finding a way of describing all of this in a very short, concise statement is a challenge, I've never been entirely happy with one, but if it's as good as I can get it to be, then it's as good as I can get it to be, and it'll have to do. So I say that just to let you know that if you try writing one and you find it frustrating, you have a lot of company, but that doesn't make the effort any less valuable. Your value proposition is going to become the core of your marketing message to your customers. It not only describes to them what you're doing, but it tells them, I'm doing it for exactly your kind of company or your kind of person. And you're telling them which of their problems you're going to solve, and you're telling them why you're going to do a better job than the alternatives might. So as you start, you'll start with one value proposition. The more customers you sell to, the more experience you gain selling, and the more customers you meet. And chances are you are going to want to go back and revisit your value proposition. I would say at least twice a year, maybe even more often than that. And make sure that it still reflects the markets that you find tend to be purchasing your product or service most often. So here in the slide deck, I have 3 links once again that can help you with developing your value proposition. And I encourage you to read through these because, as I said, it can be challenging. Um, and so that is a worthwhile effort for you to not only develop your skill in developing your value proposition, but also then apply that to your company and think critically about why is someone going to buy from me instead of my competitor? Having that thought through in advance will really prepare you to be more effective selling. So before I keep going, are there any questions so far that you wanted to ask about customer personas or value propositions? Okay. Um, one thing that is important in all aspects of your business is to be prepared to test and iterate. In other words, you have an idea of how you're going to do something, you try it the first time, you see how it worked, and if it didn't quite work perfectly, which it seldom does the first time, then you change something about how you're going to do it the next time so that hopefully the next time it goes a little better. That's fine. In the same way, everything that you have developed around your customer personas and your value proposition, all of those things need to be tested and improved further if possible. So as you are developing them, keep talking to potential customers and keep asking them open-ended questions, ones that cannot be answered with a yes or no, but they have to answer with a sentence or two. And keep doing that. Even once you're in business and selling, you're still going to be learning more about your customers. And so do loop back and refine your value proposition as you go. Note that you may end up selling to more than one market segment. Each segment of your market may have its own and different customer personas and may also have differing value propositions. For the same product or service, it may have a different value to a different market segment. And so it would make sense to have its own value proposition. And those markets may evolve for 2 reasons. One is the economy around us is constantly changing, and the market you're selling to may evolve just because the economy is evolving. But the other is that you may meet more people and your customers refer you to people that they know, which turn out to be not quite your target market. It's an adjacent market, perhaps, that you hadn't thought of. And sometimes that turns into something that's even more lucrative for you than your original market. So do stop once a quarter, say, once every couple of months, and ask yourself, am I still selling to my target market? Or has my definition of my target market expanded a bit? Or do I actually have more than one market segment I'm serving now? And if so, do I need to revisit my value proposition to refine it for each of the segments I'm serving, or to refine it for this new understanding that I have of the market I'm serving? So none of the stuff that you develop up front is likely to stay exactly as you developed it. It's all likely to evolve. Maybe not a lot in some cases, but at least a little. I talked about your team earlier, and these are a number of people that you might consider to be part of your team. For example, I'm a SCORE volunteer. We work with you at no charge to assist you with your questions in starting or growing your business. So I'm a business mentor. I would be considered part of your team. If you have peers in the business, they could be competitors that you talk to periodically. You might share information with your competitors, uh, or they might be people in a similar but different business, or people in a similar stage of business. Anyhow, you'll have a network of business related contacts. They are all people that you can consider part of your team if they're somebody that you would turn to say, hey, can I brainstorm something with you? Your attorney is definitely part of your team. Your banker is part of your team. Your insurance agent is part of your team. Your accountant and or bookkeeper will be part of your team. Those are likely all to be people that you're paying, but if you have not asked a bank for a loan yet, that does not prevent you from approaching a loan officer at your bank and having several discussions with them before you ever get around to applying for a loan. And in the process of doing that, you get to know the person, you start building a relationship with them, and that may make it a little easier to get a loan when the time comes. The same thing could go for an insurance agent or an attorney. You don't pay your insurance agent directly, you pay the insurance company the premium, but the agent gets compensated by the insurance company. So you can get free insurance advice from your insurance agent. Many attorneys will give you a brief, like 10 or 15-minute introductory meeting just to get a sense of what your needs are and whether they can help you or not, whether they're the right person for you. And they won't say charge for those introductory meetings. They may not give you any advice during the meeting, but they may help you get a good sense of how to approach the next meeting so that you don't spend any more money than is necessary to achieve your legal objectives. And then lastly, don't overlook trade organizations that apply to your industry or your area of specialty. If there is a trade organization for your industry, in some cases, they might offer insurance for the type of profession you're in that is not available through conventional insurance brokers. They can offer consulting advice. They may offer periodic industry studies that they do as a trade organization, and you can purchase or maybe get free as a member of the organization. They offer valuable networking contacts for others in your same industry with whom you may not compete directly, but that makes them perhaps an ideal member of your team because you could talk to them to bounce ideas off of them, knowing that you're never likely to compete directly, but some of their experience may be relevant to your starting your company. You're also, you're also going to need to learn about relevant regulations. And this list can seem daunting. This is more of a checklist to just make sure you've inquired about it, because not all of these will apply. It depends on your business. So, for example, if you expect to be leasing some sort of office space or storefront space, you will probably have a lease, and you will need typically the consent of your landlord to operate your type of business out of those premises. Now, if you're working from home, it's just an apartment that you live there, that shouldn't be much of an issue, but some leases do forbid you from conducting business from the premises. So watch out for that. This is most important if you had a lease, you realize that you couldn't use all of it, so you try to sublease part of your space to somebody else. That sublet space often has to also receive landlord consent for the use that the subletter intends to put it to. So be really careful about rereading your lease and what sort of consent is required from the landlord before you go ahead with trying to sublease part of your space. Your town or city may or may not have a series of approvals that you need to seek in order to be able to open. And those include perhaps needing to get a business license and approvals from the town or city. And I see a question saying, what regulations or laws apply to a home-based company? That definitely varies from town to town. In the town I used to live in, it was called a home occupation, and I needed to apply to the code enforcement officer to get a home occupation permit, which then had to be approved by the town council. At the time, I wanted a home occupation permit to be a math tutor. I wanted to have students come to my house where I'd meet with them for an hour, help them with their math questions, and I had to get a home occupation permit for that. It turned out I had a neighbor that was notified that I was applying for the permit, and they objected to my tutoring students out of my house. It turned out that the neighbor only owned a vacant piece of land. They didn't actually live there. Nevertheless, they objected because they were afraid I would generate too much traffic. And I told town council that I typically had 2 or 3 students per day, and town council approved my home occupation permit without a problem. So some towns will require some sort of formal approval, some may not, but you should definitely talk to the code enforcement officer in your town to determine whether a business license of some sort is required for your business. Even if it's not in your home, some kinds of businesses still require a license. For example, if you're preparing food and you're in Portland, you need, or I should rephrase that, you may need a commercial kitchen license, which means you have to be inspected, and that's a process. In other surrounding towns, it's a lot easier to get a commercial kitchen license because their code requirements are less strict. So do consult with your code enforcement officer to find out what sorts of licenses might maybe be required for your kind of business. Along those lines, you need to make sure that the place you're operating your business complies with zoning for that location. And there may be historic overlay districts that apply to that location, which could restrict the kind of business you conduct there. Hopefully, it just refers to the appearance of the building, but one never knows. So once again, your code enforcement officer is probably the person at town hall who can tell you the most about what restrictions might apply for the kind of business you're trying to operate. There are building codes that could affect your business. Once again, that's a code enforcement officer thing. The fire marshal may need to inspect your premises and may need to give you a certificate of occupancy for the maximum number of people that you ever expect to be in your premises at one time. This is particularly true if you have events there with 50, 100 people come in there. But it's equally true if you have a store and you might expect to have 50 customers and 10 staff members in the store. You'd need an occupancy permit for up to 60 people. You also, in Maine, as a business, may owe taxes to your town or city on your business assets. So learn about any business taxes that apply and exactly what they apply to in your town or city. This varies from one town to the next, but in general, the town is not taxing the income of your business, but they might tax the value of your assets. So your computer equipment, stuff like that. And then lastly, you will probably need a certificate of occupancy for your business. Once again, that would come from the code enforcement officer and or the fire marshal. Another question. Are our neighbors notified of your home company intent? Yes. Well, I can. In general, when somebody applies, the code enforcement officer, upon receiving the application and before it goes to town council, will notify everybody within a certain radius of your location, maybe 500 feet or something like that, and give them all a chance to send comments before it goes to town council. Now, the procedure will vary from one town to the next. So once again, that's something you need to talk to your code enforcement office about in the town that you live. So if you live in a rural town, it may not be an issue. If you live in a bigger town or city, it might be very much of an issue. But in general, ask a bunch of questions. Say, have other people like my business done this before? What kind of objections were raised for those people? Just ask open-ended questions again to get as much information as you can in advance from the people who work at town hall, because in general, they're going to try to help you make sure you can get started with as few surprises as possible. You also should look into state level and federal level licensing and legal issues. Some kinds of businesses might require a state license or federal license. Most do not, but some might. So for example, Maine has been talking about licensing general contractors. In the past, they did not require a license from the state of Maine. The Americans with Disabilities Act will enforce certain access requirements and ways that you deal with your employees if you have employees. And so it's very important to be aware of ADA requirements, both in designing the physical layout of your store, if you'll have customers visiting it or employees, and in the way you deal with your employees and your customers. You need to make sure that you're aware of what this act requires you to do. There will be labor laws that definitely apply if you have employees, and you should become familiar with them. That's part of that challenge of becoming an employer. I see Evan asked, what's a good way to learn about local taxes? Go to town hall and ask them. They may steer you to a different person, but chances are the town clerk or whoever's behind the counter will be able to steer you directly to the best person to talk about taxes, when they're due, what is taxed, what the tax rate is, and so on. Jasmine says, do you need both state and federal business licenses and town or city business license? In general, if something is licensed by the federal government, then you probably don't need state or town licenses. If it's licensed by the state, you probably don't need town licenses. That said, if you are operating under a different name than the name of your business that it was created under, then you should register with the town with your new doing business as name. So you could be XYZ Corp doing business as, Quick Cleaners. You need to go to your town and let town hall know that even though my company name that I registered with the state of Maine is XYZ Corp., I am doing business as Quick Cleaners. And the town wants to know that in case somebody complains about Quick Cleaners, they know who to contact. So start at the town level and then ask about any state requirements while you're there, because the town will probably know if something has state requirements or not. And the town may also know whether there are federal requirements or not. But most of the federal requirements for most small businesses are laws. So labor laws, how you deal with your employees, immigration laws, how you hire your employees. You need to make sure that they have a valid work permit and that you're allowed to hire them. If you have employees, you'll need to pay payroll taxes for them. There's Social Security, Medicare, and income tax withholding. But as the owner of the business, you are also going to pay what are called self-employment taxes when you pay your income taxes on the income for your business. And that covers all of your Social Security, Medicare, and income taxes as well. So here's some bad news for everybody. You're probably used to working for another company. And when you're working for a company, you're used to seeing 6-7% come out of every paycheck for payroll taxes. When you work for yourself, you pay 15.3% because you pay the employees half that you're used to paying, but you also have to pay the employer's half that you may not have been aware that your employer was paying on your behalf. They pay just as much as you do to the federal government. So if you want a rough rule of thumb, you're probably going to pay as much as maybe 45% of your profits in self-employment taxes and income taxes to the federal government and the state government. It may not be that high if you're in a lower tax bracket, but if you're in a 20-25% federal tax bracket, it could approach something close to 45% after you take self-employment taxes into account, which, as I said, is 15.3%. That's a big chunk right there. And lastly, sales tax. Sales tax varies from state to state. The state of Maine does have a sales tax, but it applies to some goods and services, but not to others. For example, I develop custom software for people, and if I developed custom software just for your business, it was not subject to sales tax. On the other hand, if I put that software in a box and I sell that same software to 10 different people, I do have to pay sales tax on it. So call up the Department of Revenue for the state of Maine and ask them, is my service or the product that I'm selling one that I have to collect sales tax on from my customers every time I sell it? And if so, register for sales tax ID to be ready to do that. Angeline says self-employment, and what was the other tax to get to 45%? So it's roughly 7.5% to the state of Maine on your profits, and then 25% to the federal government. So that gets you up to 32%, plus 15.3% payroll taxes. And that's what gets you up to the 45%. Fred says, do you have any advice on help getting together escrow to secure the property you want to purchase for the business, or do due diligence looking at a large property with many buildings? A large property with many buildings has many potential issues. The best advice I could give would probably be hire a good building inspector to come in and do a building inspection to make sure there are no surprises before you close on the deal. You may not be able to do that until you have put in an offer that's been accepted, but your offer should always be contingent on a satisfactory inspection. Now, a satisfactory inspection is a very vague term, and that gives you any number of ways of getting out of your offer to buy the property. Anything that comes up with the inspection that scares you off is a valid reason for saying, no, this is not a satisfactory inspection result. If you want to secure the property, then what you want to do is you want to buy an option to purchase. And the option to purchase is money you're probably not going to get back. If you say, I'm going to need, pick a number, I'm going to need 3 months to pull together the financing to buy this. So I'll give you X thousand dollars to give me the right to buy it at this price 3 months from now. If you're not able to raise the money and the sale falls through, the seller will probably keep whatever you paid for the option to purchase the price. It may not go into escrow as something that you get back. However, if you're just putting down a deposit with an offer, that does go into escrow, and you should get that back, providing that you've met the terms of the offer. So I hope that outlines a few of your options. If you want to talk about that in more detail, I would suggest sitting down either with a real estate attorney or a real estate broker. Use a buyer's broker and they can help you strategize that, or a SCORE mentor as well. Okay, so there's a long list of potential regulatory issues you need to know about. Some may apply to you, some may not apply to you. These are all things that you should research to verify whether or not they will apply to your business. Some might not apply your first couple of months of operating, but then might start to apply, for example, if you hire your first employee. So look at all of these with the long run view of your business in mind, not just day one of operating your business. So having done all of that research, you're now finally at a point where you might start to think about what form of business do you wish to establish? There are many choices, and you probably want to consult with an attorney to talk about your liability from each of these choices. And you might want to talk with a tax accountant to find out what the tax implications of each of these choices are. But in brief, oh, and by the way, these underlined words are all links. So once again, you can get more information on each of these forms by clicking on these links and reading the websites that it takes you to. In general, a sole proprietor is just you working for yourself. The advantage is it's quick and easy. The disadvantage is somebody can sue you if they're not happy with your product or service. And all of your assets are at risk if you get sued as a sole proprietor. Your house, your savings, your retirement account, etc. You can set up a limited liability company, an LLC. If it's just you, that's called a single member LLC. It's quick and easy in Maine, costs $175 to apply. You'll get something back within 2 to 4 weeks. And as a limited liability company, if you operate it properly and have an operating agreement, then that should protect your personal assets from company liability. Once again, you need to talk to an attorney to learn more about exactly what hoops you need to jump through to provide the most protection for your personal assets from any company liabilities. But two things that I know they will mention. One is you keep all company finances completely separate from your personal finances. Never, ever, ever buy something for personal use using company funds. And secondly, have separate checking accounts for that reason. But also keep all business operations completely separate from anything in your personal life. And then always bill your customers on letterhead that's LLC letterhead. Conduct all of your business as your LLC name, not as your name. A third form is a general partnership. This is like a sole proprietor, except you have more than one person running the company. Those people are your partners, and all partners share in the liability. Now, there are various types of partnerships. Some can have general partners and limited liability partners. So once again, you can talk to an attorney about what the options there are. But there's another entity called a multi-member LLC, which is just like an LLC, but you have more than one owner. These are really flexible, as are partnerships, in that you can have different percentage ownership for each person, and then turn around and say, oh, but you get a different payout from our earnings than your percentage ownership. In other words, your percentage of ownership gives you a vote in decision making, but the share of earnings you get might depend more on whether you're working full-time or part-time in the company. So partnerships have a lot of flexibility in who gets to vote and how much of a vote and who gets how much of the earnings. A multi-member LLC has to have an operating agreement that becomes the partnership agreement. And you definitely need to have an attorney work with you developing your partnership agreement because it is a prenuptial agreement and a divorce agreement all rolled into one. And those are all really important things to think out before you start your partnership. Another question, personal versus business finances. If you're going to pay yourself as a sole proprietor of an LLC using your profits, is that as simple as writing yourself a check from the business checking account? Yes, that's all it is. When you are a single member LLC, so don't use the word sole proprietor if you're an LLC. And if you're an LLC, sorry, if you're a sole proprietor, don't call yourself an LLC. If you're LLC, don't call yourself a sole proprietor. Don't get the two mixed up. If you're an LLC, all of your profits are reported on your personal tax return each year. You will add a Schedule C to your tax return, and that's where you show your revenues and your expenses for your business. Any profit then becomes another line on your Schedule 1040 and your Schedule SE for self-employment taxes, and you will pay taxes on your personal tax return. So all profits for your LLC are taxable to you on your personal tax return. So you are going to have to probably take some money out of the LLC to pay those taxes every year. And that's fine. You put money into the LLC to start it, you can take money out of the LLC later. If you're taking out money that you put in, it's tax-free. If you're taking out money that's profits from this year, then that's taxable income. When you take it out, it doesn't matter. You're going to pay taxes on the profits of the LLC for the year at the end of the year. End of story. You can take the money out in dribs and drabs during the year. You can take it all out at the end of the year after you pay taxes or as you're about to pay taxes. Doesn't matter. It's all income to you. The profits of the company are all income to you. You will pay taxes on them each year. And the minute you've paid taxes on all of last year's profits, that's after tax money that you're welcome to keep or put back in the company as you wish. If you put the money back into the company, make sure you reflect that on the company's books as another amount of paid in capital that you as the owner put into the company so that if you take the money out later, it's clear that that's money that you put in previously. And yes, you can just write yourself a check from the checking account and you can call it an owner's draw. That's the most common phrase for it. Angeline says the amount you put in the business you can take out, it will not be taxed. Correct. So if I put $10,000 in my business to start it up, the business is successful and starts earning money. Suppose I take out $15,000 in the first year because I earned a lot of money. It's up to you to determine how much that 15 was your original 10 and how much was profits the company made that year. But suppose the company made $20,000 in profits in its first year. That's a really good first year for a new company, but never mind. Suppose the company made 20,000 profits the first year. You're going to have to pay taxes on that 20,000 in profits, whether you've taken it out of the company or not. So it's a bit of an academic question. If you're liquidating the company and closing it down and taking the money out, then yeah, whatever money you get out of it that was money you put in will be tax-free. And whatever money is the last dribs and drabs of profits made this year that you take out, you will still owe tax on if April 15th has not come around yet. I hope that answers your question. If not, ask away. Another type of company is a C corporation. These are publicly held corporations that sell shares to shareholders. They may or may not be listed on public markets. And so just because you're C corporation does not mean you're on the New York Stock Exchange. Many companies that expect to go big and want venture capital investment will start out as a C corporation because they want to be selling shares to early investors. The Maine Secretary of State website has lots of good information about establishing any of these types of companies in the state of Maine. You can also establish something in another state, and then you could register in Maine as quote unquote a foreign corporation, telling the state of Maine, oh, I'm actually registered in New Hampshire, but I'm operating in Maine under this name. Yes, you can start as an LLC and change to a C Corp later. There can be some tax consequences of that. That would be something to talk about with your tax accountant. But in general, it's a lot simpler to start as an LLC than it is to start as a C Corp. As a C Corp, you're going to need to have your bylaws, you're going to need to have a board, and you're going to have annual, at least, board meetings, keep minutes of the meetings. You have to have a secretary, which is usually your attorney who keeps minutes of the board meetings. So there's a whole structural imposition on C Corps that does not exist for LLCs. How about advice on how to structure contracts for equity in a company or revenue earnings to be shared with a potential investor, helping me to get business started with money needed beyond a loan amount approved? If you want to have outside money, there are typically two ways of getting it: through a loan, which could be a private loan or from a bank or from a quasi-governmental organization, or it could be by selling equity. Anytime you sell equity in your company, that gets complicated fast. And you definitely, positively, absolutely need to have legal advice from somebody who is well experienced with selling equity to shareholders. So you are going to have significant legal expenses involved with giving anyone else equity in your corporation. If you don't do that, there's a huge risk that you're going to find yourself in a situation that you might regret later. So even if you are proposing a partnership of some form, where you are the general partner and somebody else is a limited partner, and they get some share of your income or whatever as a limited partner, you want to have your own attorney review that potential partnership agreement to help you understand everything there is to understand about that and understand any risks that you're potentially opening yourself up to. There are many ways that such things can go wrong unless you thought them out in advance. And that's where, as expensive as an attorney can be, it's much, much, much less expensive to engage an attorney at the time you're coming up with the partnership agreement or the equity agreement than it is to hire attorneys when somebody's upset later. No question. So somebody says, as soon as they go public, they will vote me out. I'm moving to Ireland, Germany, and so on. Well, yes, if you go public, there's a chance the board may vote you out. If you bring in venture capital as your source of funding, there's a huge chance that at some point the venture capitalists are going to say, we don't think you're the best person to be running the company from here on out. And so we want to install somebody else as CEO. You may stay on in some other role, but they might install somebody else as CEO. So one of your questions, as you think about any sort of partnership or equity agreement, is what sort of role do you wish to continue playing in the company or not? Anyhow, Lots of good stuff to discuss with a mentor down the road. A little bit more stuff about partnerships. So this is a multi-member LLC. Um, if you have a partner in the state of Maine, you absolutely must have an operating agreement because that serves as your partnership agreement. As I said a minute ago, it's a prenuptial and a divorce agreement all in one. It says how people join as partners, how when partners leave, they get paid out. It says how you'll value the company when deciding what that payout is going to be. It says over what period of time does that payout have to happen. It says which partners get what share of income. It says how much time each partner is expected to be putting into your partnership each week or each month or each year. It defines the role that each partner might have in the business. It can define lots of stuff about how you're going to work together. And this is all really important stuff to think out in advance. Because it's dealing with a whole bunch of potential future scenarios, it's very much of a what if document. And that's why you need a good attorney with lots of partnership experience to help craft the document because later disputes can end up being extremely costly. Every attorney I've heard talk about this says that each partner should have their own legal representation review the partnership agreement before they sign it. Some companies get around this by having one attorney hired by the partnership review it on behalf of all to say whether it's fair in general. That, may be okay, but every attorney I've heard talk about this recommends that each partner engage their own legal representation to review it on their behalf to give you answers that represent your interests and not the interests of your partners. Some other important details to keep in mind. Oops, there's one more question. Can you stay in LLC even if you get huge? Yes. There's no reason you can no longer be an LLC. The primary reason that people change to being something else is either they bring in more people who want either a partnership stake or equity in the company, and that's that, or they want to sell the company, and it's going to be easier to sell as a C corp or as a partnership, perhaps, than it might be as an LLC, as a single member LLC. So there are many reasons for changes. It's a broad discussion, broader than we have time for here today. So by all means, on a broken record here, do sign up for a SCORE mentor. It's a great discussion to have with a SCORE mentor. Anyhow, some other details. Oops, sorry. As I said earlier, research any licenses you might need. Before you send in your application to create a company, check the Maine registry of company names to make sure that no company is already registered at Maine with that name. But you also wish to check the US Patent and Trademark Office to make sure that nobody's trademarked that name for a similar kind of company. Because if they have a trademark on that name, they could sue you for violating the trademark if you're using it for a substantially similar business, even if there is no company registered by that name in Maine. You may or may not feel it's important to get a trademark for your company name. That is another application process. I think it's $350 to apply for a trademark on a name, something you typically might engage a trademark attorney for, because knowing exactly which types of trademarks to research is a specialty unto itself. Anyhow, you probably also will wish to check to make sure that your company name is not already a domain name on the internet so that you can get a URL for your company website that you want. That's also useful. And once you're certain that your name is not already in use, or you found a name that is not already in use, then you're ready to establish a company. If you need to consult an attorney for key questions, After you apply, start the company, you'll get back, if it's in Maine, you'll get back what's called a certificate of formation, which is your certificate from the state that says, uh, yes, we accept your company name. It's unique in the state of Maine. And so you are now able to begin operating in Maine under that name. Once you receive the certificate of formation, you'll need to get your federal employer identification number, your EIN number. It's the equivalent of a social security number for your company. Even if you never expect to employ somebody, your bank, if you have one, may still insist on your LLC having an EIN separate from your social security number. So that's free. You can get it instantly from the IRS website. You do not need to pay a service to obtain your EIN number. You also do not need to pay a service to apply for certificate of formation. There are many companies out there that will be happy to charge you for the process of applying and getting your EIN number. Some do a better job than others of reminding you each year that it's time to file your annual report, which costs you a little bit of money, $85, and renews your certificate for another year. That's something you'll have to do annually with the state of Maine. If the product or service you're selling is subject to sales tax, you will also need to get a sales tax certificate from the Department of Revenue in the state of Maine. I should mention that every state you do business in may have its own sales tax requirements. So if you have a physical presence in a state, so if I go to a farmer's market in Massachusetts, I should get a Massachusetts sales tax certificate if the product I'm selling at that farmer's market is subject to Massachusetts sales tax. If I am shipping the product to Massachusetts, I do not have to pay Massachusetts sales tax on it. You have to have a presence in that state in general in order to be liable for sales tax sold to residents of that state. If in doubt, consult the Department of Revenue in the state that you're selling to, because they are the best person to tell you the legal requirements in that state. After you have your certificate of formation and your federal EIN number, you're ready to open a business checking account in the name of your LLC or your partnership or whatever. They may also require some personal identification because that will also be in their documentation for your account. And at that point, you're also ready to get any licenses you need that might need to be in the name of your company as opposed to in your name individually. And now you're getting around to the point where you've finally done enough work that maybe you start to need funding. So the first question is, how much funding will you need? And remember way back early in this workshop when I said you should develop a cash flow projection? Well, your cash flow projection is going to tell you how much money you need. And that's usually going to be your startup costs plus the sum of all your deficits until you reach break even. Probably more than you think. I recommend looking at 2 to 3 years in your cash flow projection, and this is a link to help you do your cash flow projection. It's better to overestimate the amount of cash than it is to underestimate, because if you run out of cash, that's called being bankrupt. So that's not good. You want to avoid that. So try to make a conservative cash flow projection, meaning that you may have overestimated your expenses and underestimated your revenues, and see how much cash you're going to need to get to break even. Then go out and find it. That's not always easy to do. So this is a very common question we get here at SCORE. Where can I get money? These are listed in order of where most people tend to get money. So their personal savings is the first thing that people typically turn to. But this leaves you with a question of how much of your savings are wise for you to risk on your business, and how much are you comfortable risking on your business. Putting some of your personal money into the business, though, is going to be really important for other investors in your business or lenders to your business. They want to see that you have some skin in the game. So if you're not willing to put some of your money into the business, why should they put their money in? Second most common source is bootstrapping, meaning you keep your day job or night job or whatever and use your earnings from that job to help fund some or all of the startup costs of your business. That's sort of like personal savings, but in this case, it's continuing income, not just savings. Maybe you're using both savings and income. Third source, friends and family. You turn to your parents or your brother or whatever, and hey, would you lend me $10,000 to start a business? If you do turn to friends and family, I would recommend that you put in writing exactly what the terms are and have them sign it and you sign it. It should be really clear to them whether this is a loan that you're going to start paying back at some point at some rate of interest and that you are obligated to pay back, or whether this is an equity investment in your company, which they will get paid back by having some percentage ownership in your company, maybe, or something, or not, or what. Or maybe it's a gift that they're giving to you and they have no expectation of getting back. Or maybe if your company succeeds, you'll give it back to them in 3 years, but with no interest. In which case it's sort of a gift, but a smaller gift. Whatever terms you put together, put them in writing, negotiate them with the person who's making the money available to you, and get them to sign it as well as you sign it to make sure they don't come back to you with a misunderstanding years later. Friends and family, they said no. When I become a millionaire, I get to say no and piss off. Yeah, that's the way it works. But friends and family are not always somebody you want to ask for money. It depends on your friends, it depends on your family, and it depends what you're willing to offer them in exchange. Are you offering them a guarantee, a loan, a return on their money, or no? There are a number of grants and or competitions out there, which if you win or come in second, you get some pile of money. Those can be a lot of work to participate in, but that can be really valuable work. You'll learn a lot about how to pitch your company and you'll refine your pitch, and they may help you refine your pitch, and all that can be great and help you launch your company, in which case, great. Why not compete and have a chance of getting some money? But it's almost always a chance of getting some money. And so if you put all the time in and you don't get any money, hopefully you've had some other benefits you got out of that time you put into it. There are a few grants out there for for-profit businesses. Most grants are for nonprofits. But for example, if you have an innovative product you're developing in the state of Maine that will lead to employment in the state of Maine, either from direct employees or from vendors that are Maine-based that you intend to use, you could qualify for some grant funding from the Maine Technology Institute, MTI. So if you're developing something innovative, they can be a source of initial funding that can be very helpful to a number of companies. Crowdfunding became big with the internet. If you already have a following on social media, this can be a viable route. But in general, if you're not already bringing your following to the table, attempting to use crowdfunding is likely to be disappointing. If you already got your followers and you're saying to them, hey, buy this in advance to help me pay the manufacturing costs, you might be more successful in a crowdfunding effort than if you don't already have the followers. Loans would typically be from banks, but could also be from private lenders. Many loans, particularly from banks, if you're a startup company, you are almost certainly going to need to provide a personal guarantee for the loan. Meaning if your company cannot pay it back, you must pay it back out of your savings or income. If you're not willing to give a personal guarantee, you're probably not going to get a bank loan until you've been in business for a couple of years and have 2 years of numbers to show the bank. However, there are a number of regional financing organizations, people like Coastal Enterprises Institute in Brunswick. Their names often end in COG, Council of Governments. They often have some money which they are more willing to lend if it is going to improve the economy of that county or that region. So that's another potential source of loans. You can also get private loans, which are just like bank loans, except they're from an individual. The individual may be willing to take on more risk than a bank might, but they're probably also going to expect more interest than a bank would charge. And then lastly, venture capital. Venture capital is usually an organization which is taking a pool of money from a bunch of investors and buying shares in a pool of companies that they think have promise. If you don't have a plan for getting to $100 million in revenues within about 5 years, you're probably not going to be very interesting to venture capital people. They want to see you go big fast and then either go public or sell out because they want their money back. They may not get their money back in 5 years. It might be in, say, 10 years, but they want to see a plan that's going to have you go big and sell. And so that's particularly why they might step in and say, no, you don't have the background to take this company to the next level. We're going to appoint a CEO who can. So the minute you take venture capital money, you are jumping onto a high-speed elevator, and you better be prepared to stay on that high-speed elevator with new people being thrown at you at every floor potentially as a venture capital company says, I want a say in how you're managing and growing this company because I put a lot of money in this company and I want to get it back. So if you don't want to sell out in, say, 5 to 10 years, or you don't want to grow that big, or you don't want to just grow, and have that be all you think about all the time, then maybe venture capital is not something you want to be thinking about. Anyhow, you can learn more about all of these. They're all options depending on your circumstances. Some are likely to be much more attractive to you than others, but most people start with personal savings and bootstrapping, maybe some friends and family, get themselves through to having a couple of years of revenue, showing a growth path, and then turning to loans from banks or private lenders in order to help finance growth from there. That's probably the most common source of funding for small companies. As I said earlier, you don't need to be an accountant, but you do need to understand enough about your financial statements to manage your business. Do not neglect to reconcile your books every month. And by that, what we mean is look at your financial software, your accounting software, and compare your bank balance to what your software says. And make sure that your software agrees with your ending bank balance every single month. That's how you catch problems. It is incredibly important to do this, in part because your bank balance generally represents the cash you have on hand, and you need to remain acutely aware of how much cash you have on hand at all times. Because if you run out of cash, you can't operate. So there are 3 financial statements you'll need to understand: your balance sheet, your income statement, and your statement of cash flows. All 3 of these are links that will take you to some reasonably brief explanations of what these are and will help you understand them. You can also work with a SCORE mentor to review your financials and get yourself up to speed on what you should be looking for and why. So everything I've talked about so far, and I mean everything, becomes a part of your business plan. You don't have to sit down and write a business plan. Your business plan can be something that you end up putting together because it's a good summary of your buyer persona, your target market, your value proposition, your cash flow projection, etc. Once you've put all of this together into a business plan, it's not done. It's a living document. It's something you should be revisiting a couple of times a year, if not more often. It documents your vision for the company and your goals. And so as you reread it 6 months later, you're saying, have I achieved that goal? Do I want to change the goal? Do I want to make it better? Do I make it worse? What is it I want to change? Because this should be describing how I operate my business. Some business plans might be 5, 6 pages long, and that's fine. Others might be 30, 40, 100 pages long, and that's fine. It all depends on the nature of your business. If you have a complex manufacturing business with large supply chain issues and many procedures that are critical for quality control, etc., you might have all of that in your business plan. You might have a section that's confidential and a section that's not, too. If you're going to operate a little solo shop on Main Street, your business plan might be 5 or 6 pages or longer. It depends on how complex your plan is. Your plan describes the problem you're solving in the market, what your solution is, what the market you're selling to is, who your competition is, what your logistics are, where you're getting supply from, how you're shipping stuff to your customers if you have to ship it. It shows your financial forecast and cash flow projection, describes your team, and overall describes your business model. If you're applying for financing or you're looking for people to invest in your company, your plan is going to be read by people who read many business plans before. They are knowledgeable. They're familiar with what goes into business plans. They will be skeptical of what they read at first. So you want to make sure that every time they say to themselves, where did that number come from? You answer that question very quickly. So hopefully your plan will rely on a fair amount of objective data, meaning third-party data that you can cite. Oh, I found this on this website, or I found this from this study, or I found this from this magazine article, or it's from a research article I purchased. Cite objective data produced by third parties whenever you can to support the data you're citing for your business. And even if the third-party data does not apply exactly to your industry, maybe it applies to a broader industry of which you're part, that can still be useful because if it says, oh, the broad industry is growing at 10% a year, it might be perfectly reasonable to assumption that your segment of that industry is also going to grow at 10% a year. So do try to let people know where your data came from. And if you made it up, say so. So on the right of my favorite cash flow projection spreadsheet, there's a whole column for assumptions. And if you're sitting there saying my sales are going to grow at 5% a year, on the right, I say, well, I picked 5% because I see my competitors growing at 7%, but I don't think I'm going to grow as quickly as they do in the first year, so I'm only going to say 5%. Okay, whatever. If the person reading your plan feels that you've made reasonable assumptions and based your plans on reasonable data, after poking and prodding a few times to make sure that you can answer their questions, they'll probably start to trust your numbers. And if the numbers seem reasonable, they'll go with it. They know that your numbers are going to be wrong. No plan is ever 100% correct. But if your assumptions have been reasonable, then there's not much they can throw a stone at in your plan. And so they'll just have to go with it. And the question is, do they like what you have outlined, or are they nervous about something? And that will be a discussion that you'll have with them. Another question, what do we do if we think our bank is stealing? Um, well, that's a tough question. First of all, I would be really surprised if any bank is stealing. I have not heard of banks being accused of stealing from their customers. I've heard of payroll companies stealing from the customers. I've heard of vendors stealing from the customers. I've heard of employees stealing from their employers, but I have not heard of banks stealing. It's possible that you feel you're being overcharged for some services by a bank, in which case, talk to other banks and see what they charge for the same services. You could talk to an accountant and see if they can help you track down where missing money seems to be going. That would be probably the best place to start. Or you could talk to other banks to get a feeling for their fees and ask them, hey, this has happened in my situations. Does this seem normal to you? And see what they say. So I would probably start with your bookkeeper or your accountant, assuming you trust your bookkeeper, that is. Or you could try talking to the bank. They may or may not be willing to do that. You could certainly hire an accountant or hire an attorney to look into it. If your bank is stealing from you, your attorney can probably help you sue them, or you can try to rely on bank regulators to fix things, or maybe a combination of both. But it could be a while and it could get messy. Sorry, I don't have a better answer than that. So to wrap things up, you start at the top left here with a description of the problem that you expect to solve. And then you ask yourself, who has this problem? Who is the market that I'm going to sell to? What's their buyer persona? What's my value proposition for them? You then test your value proposition and start selling and verify that your solution is addressing your customers' problems and that your sales are growing at the expected rate. And if none of those are necessarily happening, then you tweak your definition of the problem or your value proposition or your product or your service or the target market you're selling to. And you really go around and around and around in a circle, redefining, refining who has the problem, what your value proposition is, and what your solution is and how you deliver it. So expect to go around and around and around in the circle. Every time you go around the circle, you're modifying your business plan a little bit. And that's okay. But do maintain your business plan as a living document that describes not only where you are, but where you intend to go. So starting a business is a lot of work, as you no doubt have gathered by now. It may not be for everyone. There are a lot of people who think they want to start a business, but after they get a sense of everything that's going to be involved, they decide, no, this wasn't what I wanted to do. That's okay. I'd rather you decided that sooner than later. If you do want to start a business, get to know who your customers are likely to be. That's really important. Get to know your competition. Plan to start small, test, learn, adapt, and grow from there while still testing, learning, and adapting. And don't forget, there are lots of resources out there to help you, including us here at SCORE. We free of charge. We don't charge for our services. We're all volunteers. And we can put you in touch with people who are also SCORE mentors around the country who might have more relevant information than we might have based on our backgrounds. So if I'm your mentor, it's not just me. I can call upon all my colleagues in Maine or the 10,000 other mentors around the country looking for some help in specific areas of expertise. Doesn't always mean we'll find somebody with direct relevant experience, but it often means we can. So I'm finally at the end of my slide deck. I'll bet you thought the end would never come. I'm happy to answer any questions. In case you're not familiar with SCORE, we offer free mentoring workshops. We're a nonprofit, a partner of the Small Business Administration. We have about 230 chapters throughout the United States, and we are the largest volunteer mentoring organization in the US. And if you'd like to sign up for Mentor, you can scan this QR code, and that will take you to our website to help you sign up for Mentor. Angelina asks how you get access to the links. The answer to that is you will get a copy of this PowerPoint slide deck as a PDF in an email in a couple of days. And you will also get a link to a recording of this workshop in the same email. And you can then use that PDF to follow any of those links. Other questions? I see a few more here. Never used to have Q&A in meetings, and now it looks like Zoom has turned that on. Can I comment about EEAT? No, I can't. I don't know what you mean by EEAT. If you could spell it out or give me a little more background information, that might help me there. Let's see, questions. All of my questions get unanswered. Request for mentor, no, unavail for that question. Well, if you've been trying to get a mentor, you should be assigned a mentor and they should be able to assist you, even if it means bringing in another co-mentor. So if you've not been happy, then try again because somebody should help you. If you're asking questions that require legal advice, we do not offer legal advice. You'll have to hire an attorney. If you're asking accounting questions that an accountant would normally answer, we do not do your accounting for you. We're mentors, we're not consultants. So we don't have liability insurance to do work for you, but we are happy to help you address the typical business startup or growth questions, to strategize, to brainstorm, to be a foil for your thinking. We can do all of that. But if you're asking specific technical questions that the answer could pose a liability for us if we answer it wrong, no, those are things we cannot answer. I still don't know what EEAT means, but I'll be happy to try to address that if you can spell it out. Or I can go look for it on the internet. But anyhow, I'm not seeing any other questions in the chat or in the questions and answers. So at this point, oh, there's another one in the chat. Okay, well, you're very welcome, Tyler. You're very welcome, Fred. And I look forward to seeing you in future workshops or perhaps elsewhere through SCORE. Enjoy this wonderful day, and spring is springing, so there's always hope. So for everybody else, enjoy the rest of your afternoon. Thank you for participating today, and I look forward to seeing you in a future workshop. Have a wonderful day.